Hey guys, Bob Hertzog, your real estate dad. Great episode today with Lizy Hoeffer, my favorite mortgage lender in the world and a good friend. Brought her in today to talk about the buzz that's going around about the 50-year mortgage and what they're calling portable mortgages. So a lot of opinions on whether that's going to happen, when it might happen. Lizy kind of breaks it down for you so that you can understand and get a better feel for what it means and if it's even, what are the chances of either one of those things happening. So you'll want to watch this one. It's great, and we'll talk to you soon. Hey guys, it's Bob Hertzog. Good to see you. Brought Lizy Hoeffer, my favorite lender in the world, in today to talk about two big things that were recently announced that everyone seems to be talking about, and that is the 50-year mortgage and the, what do they call it, portable mortgage? Or portable mortgage, which would allow you to keep your current mortgage, supposedly, sell your home, keep your mortgage when you go to purchase another home. Because as we know, so many people right now, I believe 2/3 of homeowners right now have a rate that's under 4%. And there's definitely a feeling out there that there's quite a few people that are kind of locked into their home because they're in love with that 3.5% rate, which I can totally understand. But I wanted to bring Lizy in to talk about what the 50-year mortgage means, or could mean, if it's even possible that it could happen along with the portable mortgage. Because I think especially the 50-year mortgage has kind of brought out all kinds of different opinions. I think people kind of, you've got the Dave Ramsey people on one side that have freaked out when they heard it and said, oh my God, you can't do this to people. You can't put them into a 50-year mortgage. A lot of my clientele that I deal with that happen to be, older, not first-time home buyer types, are of course saying that. And then you've got other people that are saying, hey, wait a minute, time out. This thing might be better than you think it is. Give it some time, or take some time to research it and figure it out to see if there are some ways that the 50-year mortgage could help some people. So let's start off with that, Lizy. Just talk to us about this 50-year mortgage. 30-year, I remember when I first got in the business 26 years ago, people thought 30 years was, oh my God, that you should always get a 15-year mortgage and that sort of thing. But, that's when average home prices were a lot lower than they are today. So what do you think?
I think what people forget is that real estate itself is the most subsidized investment you can possibly make. Like the fact that they allow you to finance for 30 years is nuts, and that they allow you to put a minimal cash down, and then the returns are based on how the house appreciates.
And you get to write off the interest.
And the property taxes and
Yeah.
all the things, right? So what I find to be interesting about this debate on 50-year mortgages is that the people that were the most outraged were real estate agents, and they kept calculating like how much interest somebody's going to pay over 50 years.
Right.
And the thing is, people, you guys, they don't pay off a 30-year mortgage. They're not going to pay off a 50-year mortgage. And these are the same people that are like, oh yeah, no problem. You'll just refinance. And it's like, okay, well, every time you refinance, technically you recast out that 30 years. So if you've had your mortgage for 5 years and now you refinance for 30 years, well, guess what? Now you're paying interest for 35 years.
5 years.
And if you do that twice, guess
Yeah.
what? Now you're paying for
Yeah.
40 years.
Yep.
And so this idea that you're going to be paying so much more interest, well, you were already going to do that with refinancing your home once or twice. And like I said, most people, they're not living in their homes for 30 to 50 years. They're generally living there 13 years, maybe 17 years,
Mhm.
right? And in that timeline, they never lived there long enough to do anything with that.
Yeah.
And so my bigger thing is, why would they roll out a 50-year mortgage at this point, right? Why are they talking about this? And it's because real estate on its own impacts about 18% of the overall U.S. economy. Okay. Now, it has a much broader impact when you consider all of the different business verticals that are also impacted by real estate. Your mortgage companies, your title companies, paint companies, flooring companies, contractors, landscapers, furniture companies. I mean,
Depot.
credit cards. I mean, you
Yeah.
name it. I mean, municipalities just for property taxes.
Yep.
I mean, so many different things are impacted, and the overall impact is somewhere around 30%.
Okay.
So when you think about how, we're heading into maybe an economic time that seems uncertain, higher unemployment, a potential recession, all of these things, well, you want to do something to prevent that. And the easiest lever is typically always done through real estate. So real estate can't be manipulated in a million different ways, that we've seen President Trump really try to get our Fed chairman to drop that Fed
Right.
funds rate. We're seeing them not do it. He doesn't have as much control there. But I can tell you that the administration's focus right now is in making homes more affordable. And there's a big debate on how to do that. Now, in the mortgage industry, because I've been now doing this since 2002, I have a pretty good understanding of how mortgage products are rolled out, how they're priced. A 50-year mortgage is difficult in terms of how would it be priced in comparison to a 30-year mortgage. So most people are like, well, if you gave it the same interest rate, right, you would see like almost a $300 savings a month, right? And I can tell you that from a sales perspective, people make more decisions to purchase on a monthly payment than their
Sure.
cash out of pocket.
Absolutely.
I mean, I have people literally pay thousands of dollars for a cheaper interest rate when I'm like, "You guys, this makes no sense. It doesn't pencil out," because that's what made them feel more comfortable. So I know people will make a decision more on a monthly payment. Now, if I compare what a 15-year is to a 30-year, because that's the real only comparison, it's a 0.5% difference in rate more most of the time, if not more. So when you start increasing the term and you increase the rate, I mean, it's not as much of a savings. Now, maybe we've dropped the savings in half, so $150. Okay. Is that going to be a big movement maker? I don't know.
Mm.
And a longer term mortgage has a higher chance, a higher likelihood of being refinanced,
Wow.
right? Especially when you have so much negativity that I just don't see the secondary market being like, oh, yeah, those mortgage-backed securities, those are gonna pay 50 I think that the pricing on that has a potential to be even higher than most people think.
Like a half to
Maybe a full point
a
higher, and
point.
then you're not really saving any money,
Yeah.
So it just
It,
depends on how it's priced, how it's rolled out,
right.
you know?
So what are you guys, I mean, cross country where you work, I'm sure everyone's talking about that and trying to figure out where to price it. Are we even at that
No.
point yet? Or
We're not even
just
at that
figuring
point.
out if it's even going to
Bill
happen?
Pulte said for sure it was a product they were rolling out, okay, and then he got a ton of negativity online, and then he quickly was like, "Well, let's talk about portable mortgages, okay, and then let's talk about making conventional loans assumable."
Yeah.
And the idea behind that, again, they're great ideas, right? Like saving a consumer $200, $300 a month so they can purchase and start earning equity. For me, I think that that's a benefit. Like, I wouldn't do down payment assistance, but if that's the only way to get into a home, one, because the higher interest, higher fees, it's most of them aren't forgivable, so you have to pay them back. But if that was your only way of getting into home ownership and earning equity, because if you buy a $400,000 house, the house appreciates at 5%. I mean, that's a $20,000 return on something you didn't even put any money into.
Right.
Right. And so you own that home for 5 years, that's $100,000. I mean, that's life changing for a lot of families. So
Mm.
I'm not as down on it as a lot of real estate professionals are, but I don't know if it's happening.
Right.
Okay.
Right.
Now, the next thing is this portable mortgage, which is that thing that they threw out. And it's basically like, hey, we'll take your 3% mortgage with you if it's going to create more supply within the market because they believe more supply is also going to bring down housing prices. So in essence, it's a great idea, and it really works well if you are downsizing,
Yeah.
okay? Because if you are downsizing, it's gonna have a big like, okay, you take your
Yeah.
$300,000 mortgage, you now wanna buy a $500,000 house. Do you have $200,000 for a down payment?
Yeah. Exactly.
And then we run into the same exact problems that we ran into with assumable mortgages. It's like, who bridges the gap between what they owe and what the house is worth?
Yeah.
Now, if you're downsizing, great. That
Yeah.
works. Now, you might also get equity from the sale of your house, right? But it has to meet the new purchase price.
That's what got me excited about it,
Mm.
personally,
Yeah.
because I've got quite a few clients right now that are, this is my, what, 26th year in the business. So a lot of these clients that I have are getting old like me, and you become empty nesters, and you're looking around that 3,000 or 4,000 square foot house going, do we really need this? And they're talking about downsizing. So one of the things holding them back is, yeah, it costs me a little extra to upkeep and maintain the place. But man, how do I, especially people in my generation and older, when they got a hold of that 3% or 3.5%, that's the lowest it had been in our whole life.
It's the cheapest housing most people have.
Yeah.
Like, if they go into any other housing situation, like, there is a very large percentage of people that would otherwise be in other living situations, but the cost of retirement living has gone up astronomically with inflation, that they can't afford to leave their homes.
Right.
So you have these other problems. So
Yeah.
if they were going to roll it out, they'd have to really incentivize the mortgage banks to do it.
And subsidize it more. That's
Right,
what you're
and so
saying.
they would have to make it appealing to the subservicers. Now, what's hard is that there is not a single servicer of mortgage that wrote a mortgage that agreed to make it portable.
Mm.
There's no clause in it. I mean, I don't even know how, like, my brain always, like, fizzles out every time I try to feel like the logistics of doing that. And the same thing when they were like, "Oh, we're just gonna make conventional loans assumable." It's like, "Well, how? Because there's no assumption clause. Nobody signed off on paperwork.
Right.
These all of these loans have been securitized and sold on the secondary market. You're gonna impact mortgage." Do you see where my brain is just like, I'm like, "Wait, the
Yeah.
sky is falling." So I don't even know if any of these things are plausible,
Right.
but here's what I do know. Mortgages have been around a really long time. Real estate has stood the test of time in terms of it being an investment,
Right.
and it's going to be more affordable to purchase, whether it comes in the form of new loan products, in lower interest rates, in the adjustments that they make to the pricing of mortgages. They're called loan level price adjustments. Like, they're gonna make things easier. Like, if something has to give
Right.
if they want to start using real estate as a stimulus for the economy.
Right. Right. And having a new Fed chairman and possibly seeing some more rate drops will make it easier for down the road for rates to come down a little bit. So good info. I mean, you got to watch out what these politicians say. A lot of times they throw things out there, get people excited without thinking about how they're gonna fix it or how they're gonna do it. Right. So
100%.
right on. Well, thank you for taking the time to come in and explain this because I know a lot of people are getting excited about hearing about these 50-year mortgages and the portability, especially in my age group. That's a super attractive thing and would free up some inventory, especially on larger homes that these families with kids and everything need right now. So we'll keep our fingers crossed and hope that they come up with some unique, plans that help more people. I mean, that's the key right now. People just someone needs to get creative and start, helping these rates come down and
I mean,
make it easier, especially for the first time home buyers. They're
the
getting
mortgage
clobbered.
industry is very nimble.
Yeah.
It has always been very resourceful when it comes to figuring out new solutions.
Yeah. Good. All right. Well, thanks again for stopping by. We appreciate it.
Okay.
All right.